Morning, everyone. It's Chris from Axel as well as Solstice. You can find us on both websites. You can check us our website, our disclosure forms, what we do, what we specialize in, as well as to get in contact with us is right down here for anyone to get in contact with us in order to help you, whether you are on an institution level or an individual investor. Secondly, you can find our website, YouTube, as well as you can find us on X. So first, let's get started with what I have up here, and I put the S&P 500 with some simple moving averages on the charts on an annual chart with the option expiration, those vertical lines that are going down basically the option expiration. What I want to do is zoom in here from the March low to this high where we're consolidating for a while. We're eventually starting to break out in the last 5 days. We do have this gap up here on the S&P 500. We are above the 18 simple moving average, the 50, the 116 simple moving average, as well as the 200. In case we do come back, fill partial gap in order to continue higher or not. This is a very important area at the 760.5 in the S&P 500, including this gap down here. If I look at the high of it, is 758.58 cents. So this area is going to be very critical in case we do come in here, fill the gap and reverse back up, or we continue up higher from the Thursday low. The Friday we break above the Friday high, look above this area. The expected move should be about 785 in the S&P 500 on the charts. Let's take a look at the QQQ. I'm going just doing the daily right now, just to give you an overall view. I know I do have a lot of information on the NASDAQ right here from the March low, but I wanted to show that linear regression channel. We eventually broke out of it. I'm going to remove this area here that I did prior, and I'm going to keep the other two channels up here that I kept. This is the expected move from the week before. We had tested the 180%. We got a rejection coming in on Thursday. We are above the 50 simple moving average as well as the 18. We have the 116 here. In case the NASDAQ does not continue to break above this channel here and that prior high to get back to the upper downtrend channel, because this is the expected move up into this area here where we consolidated on that island reversal, fell down, retested it, fell back down. We had this island and we fell further down and rallied back up. But there is weakness in the NASDAQ. It does not mean that the semiconductor and tech sector or the AI out of the woods yet, but we have to pay attention to that consolidation from the Thursday candle and the Friday hammer reversal. If we clear this area, we clear the Wednesday's high, continuation to the upside. If I come back and retest the backside of this gap, look below and come back above, that's a great area of consolidation to continue higher. Let's take a look at the IWM. I did the electronically traded funds first. And what I wanted to show you here is on the monthly bar that the Russell looked above here. This is the bottom, rally up. This was the Wednesday candle, Thursday look down, and the Friday is inside the Wednesday's candle as well as the Thursday, but we closed above. If there's going to be continuation, I look for the upside right up here in the 305. In case I do fall, I am paying attention to the backside of the 300 area and the 298 if it holds for continuation, or do we fill this gap to continue higher in the IWM. Let me take a look at the Magnificent Seven, which is MAGS, MAGS. Everybody uses that. I do not use the MAGS. I'll show you what I use, MAGS, but I'll go over this one first. In the Magnificent Seven, not including Netflix, that's Apple, Amazon, Meta, Microsoft, Tesla, as well as NVDA and Meta, Microsoft. I'm just blinking out. There's seven of them. I just blanked out in Amazon. So you can see that we created a W. If there's going to be continuation, I'm looking to break up to get above the 71 for continuation. And if in case I do fall, we can see here, if I zoom in, we do have this island reversal gap up here. I'm not sure we're gonna, come in all the way. I am paying attention to the Wednesday, Thursday candle in case I do come back in this area, reverse back up. I had this oval from before on the island reversal, which we fold. Now I can remove this or activate it. I can activate it so that way people can see it. And this is the really island reversal up in this area where we can come back to, but we do not have to come back to here. But I am paying attention to this area for continuation in case it creates a rounded bottom here, like this shoulder here, but it does not have to go further down and continue up on the small in the Magnificent Seven. So let me show you how I look at the stuff on my end, and I'm going to show you the Magnificent Seven, including Netflix. I do have Netflix in here, and you can see this area that I marked here from before when we looked above that double top failed. We created some kind of a shoulder ahead and an inverted shoulder. If there's going to be continuation, I am paying attention to this consolidation on the Wednesday candle, Thursday, if there's going to be continuation to the upside in the Magnificent Seven, including Netflix right here on the charts. Let's not get rid of this, and I'm going to go over some individual stocks and come back to the S&P as well as the Nasdaq. I'm going to go first of all to SpaceX, SPCX. Everybody on the IPO, you can see I have a lot of lines. This is the put wall that we have up here at the 135 or 148, 150 area from the IPO. We are trying to push back. We had that 110 area that got brought quite a bit, and eventually we reversed everybody that was short in on Friday because of the Thursday's candle. There was a push above the 110, 108 area, and we cleared it and we pushed above the 18. We are looking to consolidate, even if SpaceX comes back to the 118, 117 and continue higher. I do have a target about 154, 150 on the charts due to the reason of that consolidation. You can see where the put wall was 148, 152, where we failed here. We couldn't hold it. I'm going to zoom into this area, keep the other ones from the IPO where it started. You can see that this area, I have a marker of 134.45. If there's going to be continuation, we round up here and we continue higher up to that 151 area. 152 would be a great target on SpaceX because a lot of the people that were short, when they are expecting a move down, and everybody gets caught because they're thinking, oh, SpaceX reported doesn't look good, let's squeeze them. And what did they do? They do the opposite and they buy it back because there was a large block of release on that IPO, that are able to trade in the market. And you can see that volume on Thursday when it came in. You can see it right up here when I mark it. If I put my mouse on this one, that was 208 million. If you look at this one on that move up, that was 255 million shares traded up there. And the second one on Friday, that was 242 million. If I zoom it down to where the IPO was right here, you can see that volume was 525, 22 million shares. So more or less from the IPO and the release of trying to hold it. You see here when they were coming in, and that was the other volume that was up here when it was trying to reverse back up. They couldn't hold it, and they lost the IPO level on that chart in the 135, 152, 155, and fell back down. Now the volume is coming back in. I'm expecting this, to consolidate even harder and push towards the 150. Let's talk about Palantir, PLTR. Similar situation on that IPO. Let's zoom it back down here. And I wanted to go over this in the last, not just the 3 quarters. You can see that where the IPO was, that had a 320 revenue. Then here they had about 440, and here they had about 600. And all of a sudden we get $1 billion on their earning report and they get squeezed straight up. This is very important. The target on that push up should be about 190 to 188 to 192, but I'm expecting if there's going to be consolidation in Palantir because of that push up, everybody's expecting the move down. And you can see when it came back down, it tested the 200 SMA. I will zoom it in so everyone can see it. You can see that's my 200 SMA. If I right click on it, you can see that says 200 simple moving average. We came back on that earning report. You get that nice squeeze up and the volume picks up. If I look at the volume here, if I just put my mouse on it here, it had 175 million shares. Whoever was short basically got squeezed. You rally up, consolidate, come back halfway, test the 200 SMA, and on Friday, rally up with that gap up. If there's going to be continuation and we do fall, pay attention if there's going to be consolidation here and in this gap. If it looks below, continue, or there's going to be a breakout towards the 188, 190 target in the future. That means there's going to be a large squeeze. And you can see on the Friday candle that volume basically was 77 million shares. And on Thursday, on that consolidation, the star was 41 million shares. So more or less people are trying to take profit, trying to find out a way to trade the market. So let's take a look at now IGV, and I want to talk about the differences between the semi and the tech sector. You can see in the software technology sector, you can see IGV. There was a W here, consolidation, and a breakout towards the top. If there's going to be continuation, I am paying attention to that island reversal up here because I think the real target is about 108 in IGB. If there's going to be continue, even if it falls in, comes to a partial gap and reverses and breaks up above the 103.75. I think the target is about 108 to 111 up in this area, 110.50. So more or less trade what the charts offer you. Don't be biased on either side. Let's take a look at the semiconductor SMH. And I'm going to show you the difference between SMH. You can see in the SMH, the semiconductor, you can see there's a lot of consolidation. I had put these island reversal. We filled this one, held the 116 SMA, tried to rally, but what is the problem here? We are above the 18 simple moving average, but we have headwind above the 50 Fibonacci as well as the 50 SMA. If I right click here, that way you know where my 50 simple moving average. I showed you earlier the 200 SMA and I marked it. This is the 116 SMA and this is my 18. So more or less we are in consolidation in case the semiconductor does not work. Let's do one more on XLK or SOX SOXX because a lot of people trade, different instruments. I tried this is in the semiconductor. You can see it's in the same shoe, but if I look at the XLK or IGV, they doing much better. If there's going to be, we are above the 50 and we are above the 18. If there's going to be continuation and we fall back halfway, find the 186 support and we get a breakout, I'm looking to break above the 190 towards the 194, 195, coming back to this area here in XLK if they're going to be doing more building and stuff from the storage to the facilities to the AI and so on. So you got to understand these sectors. Let's now take a look at the SPY again. And what I want to do here is break it down on an hourly chart or 4-hour chart to show you what has happened in the last 20 days. If I bring it in that consolidation, come on, show up. Okay. You can see we were consolidating here. We fell down, rallied up, and we cleared this area. You can see it. This area is very important for me in case SPY comes back. This is the gap on the profile. If I take the overnight, this is your gap. I'll show you how to do this. You go in the style, you go to the setting where we say equities, uncheck or highlight the overnight. If I push apply, now you're going to see where the island reversal is. And in case there's going to be continuation, the expected move is about 183 to 184. And if we're gonna fall back in, I'm paying attention to that Wednesday's bar. This is the Thursday, Friday. It's a little bit more stronger, but if I do fall to fill the gap, look below and reverse back up, I'm expecting it to move higher. Let's take a look at now QQQ. Come on, QQQ. And you can see in the QQQ where the island reversal, we are above the 50, we are above the 18. That was the downtrend channel. That was the Wednesday's candle. This is the Thursday. like a star, doji, but it continued higher. We tested the low, pushed up, came back in, but fri- on Friday candle, you get a reverse hammer and rally up, but it's inside that Thursday, Friday's candle. If there's going to be continuation, you got to pay attention to the Friday candle on the open. If it's going to open above and continue, or is it going to reject and fall back to this area to find consolidation and reverse back up? So the expected move is down to that gap fill in the 50 SMA in the backside of this channel and reverse up. And if there's going to be continuation, then you look for the backside of this channel and the breakout where the expected move is around the 335 to 338. So that's on QQ. Let's take a look at IWM. IWM. And you can see here in the IWM that move down, the breakout, the rally, but you are inside the last 4 days range. Because if you take this is the Monday, Tuesday, Wednesday, Thursday, Friday, this was the prior week's Friday. Look above and fail on that channel. If I draw an uptrend channel, we are holding coming back to that uptrend channel, partial gap. There may be continuation towards the 304, 306 area. If it's going to fall back in, I'm paying attention to that gap island reversal and continue higher in the IWM. I don't see any forecast of a bearish move, very, very bearish move. There may be consolidation for continuation higher. So this is on that side. But if I take a look at MU, you can see in the MU it's a little bit more weaker. Let's go to the daily. Let's go back to the style. I'm going to go back to the setting. I'm going to put the equities back up, show and highlight it in the overnight, apply, bring it back into a daily chart. And the reason why I'm doing this, I want to show this is the expected move when we did the earning report. I'm going to remove it here. You can see that this consolidation, it's still in a downtrend. You have an overlap of the 18 SMA while the 50 is above, and we are holding between the 50, the 18, as well as the 116 SMA between the 50, 116. There's an 83 EMA here just holding this candle. You are in that consolidation. If there's going to be a push up, pay attention between the MU and SanDisk. I don't like the way SanDisk is in relationship to MU because the expected move is going to push higher. You're looking towards that 50 SMA. I'll show you SNDX. And SanDisk, you can see that on SanDisk after the earning report that pushed down. And, oh, SNDK, sorry, I put SanDisk. Oops, sorry, wrong symbol. There we go. That's a lot better. So you can see in SanDisk, we are in that downtrend. The 18 is holding us down in that downtrend channel. It depends how I anchor it. If I grab this candle here and I anchor it, we're going to be, let's just do a downtrend channel. I will pay attention to that down first channel right here. And you can see we are in that downtrend in 18. But if I do grab this one here to this, it's got a little bit longer way to go back towards the 18 between the 18 and the 50, the 32 SMA and the F3, which is the 38.2 Fib. If there's going to be weakness, there's going to be a change in trend. So if I put SanDisk, you can use TradingView in comparison to MU. I'll put MU slash SNDX, that's the fraction of it. It'll show me that there's more strength in MU in relationship to SanDisk. So this is a way to kind of keep you out of trouble. And if I take a look at Dell or HPE, DELL, you can see the setup in Dell is trying to push, but I am paying attention to that large candle up here. And HPE, you can see it held the 18 SMA and broke above in HPE. You can see the 18 and the 50 trying to hold, and these wicks are brought into. If there's going to be a push, then you expect the move to go higher in HPE. I'm giving you some ideas. This is for educational use. Don't just go twist my words. And these are the reasons why. I will show you another one where Oracle was got beat up so badly, ORCL. You can see in Oracle when it got beat up from that 250, it lost more than 50% of its move or 100% of its move. If you take 250 to 115, that's about more than its value. Is this going to be a rounded bottom? If I zoom in here just alone without looking at the top of this candle here, you can see that rounded bottom, and it's creating that cup. If there's going to be continuation in Oracle and this is going to get brought out, and if it consolidates and gets a breakout above that 148 area, I'm looking to about 160 area, and this consolidation up here where it fell down through these three soldiers, bringing it back to the 50 and the 38.2 on the charts. So we trade what the charts offer us, not what we think. That will help you a little bit more in the trading. And I'm going to go back to SpaceX, and I'll do the measured move on the ES and the SPY. Let's go to SPCX, SpaceX. And the reason why I am bringing this up, I want everybody to pay attention to that. Basically this box here, this is basically where the call puts were between the 125 and the 130. It cleared it in case it does fall back into the point of control, and there's going to be continuation. This is the weekly expected move from high to low. You can see my measurements. I'm going to bring it into the hourly chart that I have, the 4-hour chart. You can see where my high is, my 200 SMA, where it's stalled between the 200 and the 116 SMA. I do have an 83 EMA here. Just I don't have it on the charts. I usually use it as a reference point in case we do pull back towards the point of control and continue. I'm expecting to move to the one, not just the 150, the 125, which is 123, 138, 150, 161. I'm expecting the move to come back in this area in the backside of this uptrend channel target up here. In case I do fall back in, there's going to be accumulation in this area to push higher on the chart. So the expected move down, if I do pull back, you can see between the 80, I have a 78.2 here. Between the 50 and the 80, there's a 61.8 fib. If it comes up here, I would rather accumulate like we did on Thursday and Friday, buying it and rallying up. I'll buy more on the pullback to continue higher towards the uptrend. You can see my targets. This is a point. This is a pivot point, 145, and eventually the 150 target to the upside. So I trade what the charts offer us, not what we think. Let's do now the micro ES expected move, micro ES, and I will go back over the micro ES expected move. This is the weekly one from the before. I'm going to remove this, remove the drawing. We can see on the weekly chart, this is my high. This is the Friday low. So I'm going to go to the weekly chart. I'm going to do the expected move from this high to this low. You can see where my Monday was a little bit lower, or the 42. Just let me check which side was it. This is A250, 43.50, and this is 42. So my expected move here, I will change these to baby blue or Zion. So you can see the extension from 0 to minus 100, from 100 to 200. You can see it. And I'm going to change these colors to make them baby blue so you understand the expected move is in blue in relationship to the monthly Fibonacci's, and this is my expected move on the charts on the S&P 500, where the micro ES, I'm showing you the micro because the ES has a lot. This is what I trade, but I wanted to show you a cleaner chart where the expected move can be coming back to the upside of the 161 and that uptrend channel, and vice versa in case I do fall to fill that partial gap where I took the overnight high off. Let's take a look at the micro NQ, and I will do that one in the small cap to show you where they are. You can see that downtrend channel no longer valid. I'm going to remove this channel too, because that was the first downtrend channel that we broke out. We broke out of that second one. So I'm going to zoom in to where that, and I'm not going to go to the Friday or the Thursday. I always go from Sunday through Friday on the weekly expected move. I'm going to grab this high here to this was the Friday candle, so this was the Monday low. This is my expected move. I edit the property, I make it blue again, or cyan, and we can look at the expected move to the upside as well as to the downside in case there is going to be a pullback on the Nasdaq 100. Let's do last but not least the small cap micro 2K. I don't know if there's any fibs on it. Okay, there's nothing there, which is great. We can take a look at the Wednesday's candle high. This is very important. If we clear it on the S&P, the Nasdaq, as well as the Russell, we can take this high to this expected low on Sunday, and I'll do the measurements, edit the property one more time, go to blue, and I will show you this on the daily chart to finish the video. We go to the daily. We're going to zoom it in. Okay, everyone? We're going to zoom this in. You can see where the prior month high was on the small cap. When we looked above and we came in that downtrend channel, we're pushing up. This Thursday's candle, very important, as well as the Friday. It tested the 50, pushing up. We are above the 78.2. We are holding the 18 and the 50 simple moving average in relationship to the 5 simple moving average. If there's going to be a pullback, I am paying attention to this slide here. If there's going to be a pullback to continue higher, and if there's going to be a breakout and we clear the Wednesday's candle and the prior month candle, my expected move is towards the 161, which is up in this area, and the 150, there's a 138 here. So on the pull up, on the push higher, you take profits into the push. On the pullback, you walk away, you buy the dips and rally back up. So trade what the charts offer you. I hope this video was very helpful. If you have questions, once again, get in contact with us at Axel or Solstice in relationship to the charts. And here is the services. If you go to Manage Capital, you can go to Solstice, get in contact with us. We do have on the website a Discord channel if you want to join us. This is the just to look at the charts and stuff. If you want to join, you have these two, and the special platform won't be available for everyone till the following quarter because we are opening an API signal for the charts to trade algorithm. So take care, over and